Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I'm super excited today. We have an amazing guest, Mr. Brian Mitchell. Brian, how's it going, brother?
Hey, Abel, how are you, man? It's a huge fan of your podcasts, and I'm excited to be on one of them. And, just love your content, and be happy to talk a little bit more about insurance and real estate.
You're the man. I paid Brian for some good intro, and thank you. It was worth it.
That's right. Checks in the mail, right?
Checks in the mail, man. So thanks a lot. Hey, Brian, I'm happy that you're on because, for those that don't know you, you're a real estate investor, property manager, you've done these things and a lot of experience through the years, insurance broker, networking group organizer. I know you're a big business podcast enthusiast and a big believer of hustling. So you're in insurance today, and you've done a lot of things in real estate throughout the years. Let me just turn it over to you for a second. Tell us a little bit about who you are and what you do in real estate, and we'll work our way back into what you're doing today.
Oh, that's great. That's great. So, yeah, I'm Brian Mitchell. I've been in the insurance business for 10 years. It'll be 10 years next month, and I really focus on insuring real estate risks everywhere. Started in the Northeast, and we've really branched out or have created a national presence with our program and the risks that we're writing. And I started my real estate investments about a year and a half ago, and it all started August 8th, 2010, when I listened to my first Bigger Pockets podcast.
Mm-hmm.
And I just loved it. I loved it. And, I was genuinely enthusiastic after that about multifamily investing, and was so enthusiastic that I started my own meetup group 2 months later. And November, so we're 2 years into my meetup groups. And I know we had a little hiatus this year due to COVID, but we're going to start doing some of them through Zoom. And the first meetup group, there was 18 people that showed up from 5 counties, and was really excited. And then it just grew, and we've had some great presentations. We've had some great investors there, some realtors there, and it's just a really good opportunity for us all to learn more about getting into real estate investing.
Yeah, that's awesome. And kudos to you for taking action and just kind of getting after it. You heard a podcast, number one, kind of kicked you off in this new direction, and then pretty soon you're starting your own meetup, man. So tell me about the mindset there first, and then we'll keep digging in this past. What was the mindset there? Were you worried, scared, excited, a little bit of both, all of it together?
Well, I think in life you always have to be living just outside your comfort zone, because that's how you're ever going to get anything done. Mm-hmm. And taking massive action is huge in anything you do. Taking massive action in education, taking massive action in getting your message out, meeting people, talking in front of people. I mean, this is my first podcast, and is it easy? No, but taking massive action and getting it done, and not allowing fear to take over you and take over your actions.
Mm-hmm.
So my mindset is just roll with it and move forward every day. Try to find a way to get that much closer to your goal,
mm-hmm.
and never waste a day. Even if it's reading a chapter, even if your day got away from you.
Yeah.
Read a chapter that night on a real estate book, because you're that much closer to your goal, or you've enhanced your knowledge in a specific subject. So getting in front of people, meeting people, and taking massive action.
Yeah. I love it. Brian's one of those individuals that, at least for me on our side, when we have content, when we, put a new meetup out there, whatever it is, on social, I see Brian kind of engaging, liking, commenting, this kind of thing. And believe it or not, like those things get noticed, and I go, what, man, who is Brian? And I'm kind of reaching out to him, having a conversation, and next thing you know, we're on a podcast together. So it happens. And I'm a big fan of taking massive action as well. I think some people go, I'm not a fan of massive action. I like small increments daily. And I go, yeah, but I think though that's just like investing. It's compounding interest in investing. And I think it's compounding action in the daily small movements, small movement here, small movement there. You add those all up and it compounds to some massive action over enough time. So just like you said, Brian, if the day gets away from you, maybe you didn't quite do what you wanted, read a chapter in a book, and that was your action for the day. And every day you make small improvements. And if with enough time, like, you'll absolutely have massive action behind you. So there's a life. Don't waste it. Right.
That's right. Don't waste it. And, take the bull by the horns too. In 2020, it's so easy to, enhance your knowledge for free online. Go to a meetup group, start a meetup group, and it's all free. So it's not like it's a big deal to get this stuff done. You just got to do it.
Yeah, that's awesome. Well, thank you very much for the background, and we really appreciate it. So, Brian, I know you spent one of the reasons I wanted Brian on was I like having some of the experts in our multifamily commercial space. There's a lot of team members in any deal. If we're buying a 100-unit apartment complex, I'm definitely not doing it on my own. There's a lot of general partners. There's a lot of limited partners. So people think of, oh yeah, that's the team. But really, there's a lot of team members outside of the investor pool, outside of the general partner, limited partners, title company, your appraisers, your lenders, the insurance, and that's where Brian spends some expertise, or spends the number of years, 10 years writing commercial insurance policies for one-owner landlords and partnered multifamily syndications from coast to coast. So that's what I wanted him on the show for. So, man, why don't we just dig in here? Tell us about the insurance market in 2020. What's going on?
Well, I'm sure you've all been seeing your renewals, and to get a flat renewal is something of the past. And 2019, Q4 2019, we started seeing the market hardening. So carriers are really taking a look at their books of business and really scrutinizing. Underwriting scrutiny has really been at its peak since a year ago. They're taking a look at valuations and making sure that what their insured is reporting to them, or what their agent is reporting to them for values on properties, are accurate. And rate increases are a result of, social unrest, COVID, storms and wildfires, and rising tides are floating all boats. And even though you may not have any loss history, rates are going up between 10 and 17, and sometimes even more than that.
Yeah.
Depending on your portfolio and where it is.
I think I remember 300 a door, 350 a door, now 400 a door, at least in the assumptions early. I haven't, not that I work with an insurance, specialist to help me get a quote on a door when we're actually, submitting offers and that type of thing. But when we're underwriting a bunch of deals in advance before we have LOIs out or anything, we just stick in a number for the insurance, and we had a 250, 300, 350, and now you're like, well, man, better stick $400 in there just to stay safe. And this is why they're rising. I kind of thought, man, it's the wildfires. I've heard that's part of it, but it's really everything. It's everything as a whole. It's a sum, right?
Oh man, it most certainly is. And particularly back in like 1970s, and I know there are a lot of value add investors that purchase properties that were built back in the 70s or the 80s. Aluminum wiring is a big one. So underwriters are really taking a look at what type of wiring, is in the property. Has it been updated? Is there any aluminum wiring? And, does the investor have any intent on swapping that out for updated copper wiring? So they are taking a look at new business, no different than they have in the past, but especially during this hardening market.
Got it. Yeah, that makes perfect sense. Okay, well that makes a lot of sense. To kind of pulling it all together. What should owners be looking for in an insurance agent? How do I just choose the right individual? What do I look for, Brian?
Yeah, in my opinion, you look for somebody with a type A personality, somebody that is competitive, ambitious, somebody that can really take the bull by the horns and run with it. The markets open up 120 days before the renewal. So if you're a January 1st renewal, the markets are opened around Labor Day every year. So that agent can begin the negotiating process for the renewal on the 120th day. So siding with somebody that is a true vigorous negotiator and somebody that can really get on it. Yeah. There is no excuse in this business to give you last minute renewal pricing or the day after renewal pricing. When the markets open up 120 days before the renewal, you then have the carrier's ear at that point to start working on the renewal. So make sure the agent that you're working with is really getting out there and providing you pricing within an agreed amount of time. Typically 2 weeks prior to the renewals is a nice time to get your pricing. But we've certainly delivered renewals 30 days, 45 days before the renewal date, in the event the insured wanted us to go to market for them.
Yep. And those are the renewals. When I'm making offers, what extra factors or insights do I have to take into account for?
Yeah, when you make an offer, you're going to get your trailing 12s, you're going to get your T12s, and they'll have an insurance number. 98% of the time, that insurance number is wrong. So when you go to your agent and then you have them try to get you a number based on the property that you're looking to buy, they should be able to give you an off the cuff number within a few days. It will have to be underwritten. Mm-hmm. But what you should do is get the policies from the seller, mm-hmm. and then make sure that the coverages that they have, the properties are in fact insured to value, so they're insured correctly. And if they are, you could base your numbers off of what they're receiving for a number. Mm-hmm. It's a pretty good indicator. But there are many times where I'm looking at seller policies where the properties are insured 50% to value, 60% to value. Dang. And that's not good. Never good. Yeah. For those that, just let's say we have a lot of, to frame this a little bit too, Brian, I apologize. I didn't when we started, which is we probably have some passive investors that are listening to us, a good number of passive investors that are first time limited partners, second, third, maybe some pros in that limited partner space that are just trying to learn more. And then also some like first, second, third time general partners that, are trying to learn more for themselves going active. Right. So it's kind of that two frame thought. And part of what you just heard as a passive investor, maybe a good question that spurs this for your operator syndicator is, about your insurance. What type of coverage do you have, and is it insured for the value? And it better be right. These basic answers, but if the answer is like I don't know, you definitely want to go make sure that that's squared away before you're putting in your money into it. Because man, if my property is insured at 50% of the value and something bad does happen, a fire, whatever the case is, right? Then man, I want to make sure my money's covered in the deal. So how do I actually test that? So I'm buying a deal. I'm under, I don't know, 90, any number of days, 60, 70 days, right? In this time period. And if I have this under contract and I haven't bought it yet, their old insurance policy doesn't really affect me. But the moment I step in, it does. When is the lines transfer or crossover? Because I sure don't want anything happen to this property while I'm under contract either. How do we stay safe here? Yeah. So the day you sign is when insurable interest. You then have insurable interest on the property.
Mm-hmm.
So the day you sign and the day your LLC owns it, you'll have insurable interest in the property, and your policy should reflect the LLC that you're purchasing it under. But for an LP's, from an LP's perspective, if you're particularly concerned about the insurance program that the investor is about to buy, I would recommend having the investor send you the quote that they're going to be binding with their insurance agent, and make sure that there are coverages on there that are going to protect you as an investor, like business interruption coverage. A lot of investors, for one reason or another, decide not to really spend a lot of time honing in on a correct business income limit. Now, business income is also known as rental, like loss of rents coverage for apartment owners.
Mm-hmm.
So basically, it's your net income that you otherwise would have received had no loss occurred. So in the event of a fire in a building, the loss of income coverage will pay you, the insured, for your net income that you would have received, had the fire not happen during the period of restoration. So make sure that the business income limit is satisfactory and not low. And, that's a big one. Make sure your property limits are in line. Coinsurance is a real pesky thing, and we have to really worry about that. And typically coinsurance comes between, an 80%, 90%, 100% coinsurance. So you'll see it on your policy. It will give you the limit of coverage that you have on your buildings, as well as your coinsurance. And to determine, if you are in line, if you were insured correctly, the coinsurance formula, if you're writing things down, is did divided by should times the loss less your deductible. So did.
Let's break this down. That's awesome.
Yeah. So did. So what you have for insurance coverage now divided by what you should have. So let's take a look at a $130,000 building. And I realize that the investors that are listening probably have properties a lot higher than this, but we'll just look at a $130,000 building, and let's say that there's a $50,000 loss. Well, a lot of people would think that let me back up, $130,000 building with a $50,000 loss, but the policy is only insuring that building for $100,000. So a lot of people would think that if I only have a $50,000 loss and my coverage is $100,000, then I'm good, right? I'm good up to $100,000. Well, that isn't the case, because coinsurance is what the carrier assesses, and it's designed to get insureds to insure their buildings to value, or at least in this case, 80% to value, which is what we're looking for here in this example. So if we did over should, 100,000 divided by 130,000 is 0.769, which is under 80%. So basically, you're insured for 77% to value. So if you times that 77% times the loss, so times that by 50,000, you get 38,450, and then you take out your deductible. If you can only imagine a $10 million deal being underinsured by $3 million, $10 million building should have been insured, for the $10 million building, but was only insured for $7 million. You're effectively insured for 70% to value. So even at a $100,000 loss, you're only going to get 70% of, 70% of what you should have.
That is not a good day. It is not a good day for the investor team, anybody on that side. So what are the things that you guys look at to make sure that I'm in the right, to make sure I'm sufficiently covered for the right dollar, the right value?
Yeah. So what we look at is, we go to the town assessor page and we work with the investor in determining, what is the building made out of? Is it a frame building? Is it a non-combustible? Is it a masonry building? Is it sprinklered? And then we sort of have our own benchmark, square foot of, for instance, multifamily frame, $175 per square foot is a good benchmark that we use. But we also have replacement cost estimators that we then take, the percentage of carpet versus the percentage of linoleum and hardwood and, sheetrock and, livable square footage. We pump that into a replacement cost estimate, and that gives us a number for that building. We then go put that number on the application that we build for you, and then we send it out to market. And that's how we we develop our estimates for replacement costs on the properties.
Got it. So it doesn't really have anything to do with my net operating income at all. It's more of the property style, vintage, flat roof, pitch roof, all the different things, probably boilers, chillers,
Yeah,
like you said,
that's it.
aluminum wiring or copper, right? Or, whichever ones. And so those are the factors that you're looking at. Um, and what if when I look at my net operating income, that thing is just like, it's just a screaming deal. This is going to make a ton of money. And I know my valuation is going to go, I bought it at 10 and I bought it to become 14. And where do you guys value that if like today's value is 10, but tomorrow's going to be 14? How does that work?
So typically, unless you're doing a massive value add or an addition to the building.
Well, that's our plan. That's our plan on the buys. So
yeah. So
yes.
additions to the building will increase the footprint of the building. Therefore, the livable square footage will be greater.
I apologize. Not additional square foot. I may have cut you off, and I get excited sometimes. But value add interior units, really capital improvements. We're not, for the most part, not building another extension or more doors, but it's like interior renovations and the capex to the exterior.
Yeah, no, that's a good question. You'll want to update your agent with, for instance, if you're trading out the countertops with marble, which were, some builder's grade, vinyl before, the obviously the cost to rebuild that unit is going to be greater. So you'll want to just let your agent know after the work is done. We've done some improvements and betterments to these buildings and to these units, and we should really look at the replacement cost estimate. By and large, your cost per square foot probably won't change that much, because the policy is still covering you for a refrigerator and for a dishwasher, and for flooring and for cabinetry and stuff like that. So we'll adjust a little bit, based on the new stuff that you've added. However, it probably won't change that much.
And so just to make sure that I'm properly covered, just kind of as we're doing interior renovations or exterior, we're kind of updating our insurance and saying, hey, this is how things are going. I want to make sure I'm insured for the right number.
Exactly. And depending on the scope of the renovations, you may be better off in what's called a builder's risk policy. And a builder's risk policy is designed to cover, it's a property coverage policy, which is going to cover your buildings as they are at closing, and then it will cover the increasing value of the building during your period of restoration. And then once the build out is done and leased up, you could then transfer that policy to a standard business owner's policy, a commercial package policy, which you would write out for the years of ownership.
Okay, well, that sounds good. Hello. You're listening to the 5 Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review, and we're going to send you a free copy. So thank you so much for subscribing to the 5 Talents Podcast. We really appreciate it. Well, while we're on this topic, right, for new builds, so we do have new build. We have a project going, And what are the factors from a new building, or like, let's just say from ground up, right? I bought a piece of property. I need to have it insured. There's nothing on it. It's just dirt. Do you kind of, do you help investors navigate, hey, what's needed at, month one, month six, month 12, buildings now, horizontals there, and now we're going vertical, and, how that changes. Tell me a little bit about that world.
Yeah, that's a perfect example for a builder's risk policy.
Hmm.
So a builder's risk policy will cover you from a from ground up construction. And not only will it cover the building as it's being built, but it will cover you or the general contractor for any material as it lay next to the building prior to being affixed to the building. So a lift of 2x4s, the builder's risk policy will have an endorsement that will cover material not only in transit but material as it uh, lay waiting to be affixed to the building, attached to the building.
Hmm. Got it. And then how do you all determine, values at that point? Do you take my plans, my architecture plans, what it's going to be, or do you just look at, hey, what is it today? It's land and it's materials that are happening, and how often does that price change throughout the build process?
Well, the builder's risk policy is rated just like any other policy. What we do is we take a look at what the property is going to be built up to be.
Hmm.
So the final stages, the day you move in, and that's really what it's going to be rated on. So it's going to be like, it'll be one price, and then the policy will cover the property as it's being constructed. Those are the easiest the easiest properties to determine an accurate replacement cost estimate, because the building was just built. So you have the general contractor documents, and
Yeah.
it says this is what the building costs on this date, and this is a really good replacement cost estimate.
Nice. Okay. Well, this sounds good. Well, as I'm thinking about the insurance world and thinking about the agents that have helped me, why don't you describe for our listeners, like, what does a good insurance agent do and provide services for, and how do you help investors like myself and other general partner syndicator teams?
Yeah, I mean, a good insurance agent is going to be, with the insured throughout the entire policy period. So you're going to have the agent and an account manager. The account manager will be, sort of in the office behind the computer screen, during office hours. They'll be the ones that will take, the calls and send out certificates of insurance. But the agent will be working on negotiating your renewals. The agent will also be going to market for you. So keep in mind, the markets open up months before the renewal. So a good agent will get out to the markets in the event you want them to go to market for you that year, and then start building your case to competing markets. And in the event of a claim, your agent will work with you and an in-house claims team. Typically, larger agencies have in-house claims personnel. They'll work, alongside the claims team throughout the claims process and until resolve. And if there's any pushback needed on the carrier for any reason, valuation disputes, anything like that, the agent is responsible for going out to the carrier and negotiating on your behalf.
Got it. Okay. Yeah, that makes perfect sense. And then how do I, how do I vet multiple insurance, brokers or agents out? And, you know, I want to make sure I'm getting the best deal. But at the same time, I'm always wary of how many people do I go to, and everybody else I have to tell no to. Give me a little bit of etiquette over here on how to do it the right way and not upset anybody at the same time.
Boy, that is a great question, because understanding this prior to finding your next deal and putting it under contract is crucial. Because once you hire an independent agent that has access to most of the standard carriers, the ones you hear about on TV, like Travelers and Liberty Mutual, the independent agent is going to want to go to all of those markets. So if you have 2 or 3 or 4 involved, everybody's going to be tripping over themselves to get to the markets. to try to claim their market. The reason why I say claim their market, because once an agent goes to a market, like if I was working on your next program, Abel, and I went to Travelers, that would then block Travelers out for any other agent to go to Travelers. So it can get a little convoluted when you use multiple independent insurance agents. So my recommendation is, if you want to use more than one agent, assign markets to each agent. So have their agent pick 2 markets that they would like to go to, and they'll run with just those 2 markets. So that way nobody's tripping over each other. Everybody has a fair shot. And if that agent can produce a quote of those 2 markets, and you'll get 2 quotes from that agent, if that agent strikes out and the market, can't write the risk for whatever reason, then they'll be thought of as a potential down the line, I'm sure. So using multiple independent agents can be tricky because once one agent goes to a market, it blocks anybody else from accessing that market. So practice market assignment, and above all, just go with an agent that has some true fire to them, and somebody that's just genuinely interested in real estate and working with investors, because they need to be excited about your project, and they need to go to the markets with that excitement, because you're basically hiring them to take your portfolio and make it look as good as possible, be as transparent as possible as to what's going on. That will get you the best price. And hiring an agent with some true fire, some true enthusiasm, and some genuine interest in real estate is what I recommend.
Yeah. We want somebody that's a little excited to go help us get the best opportunity, and then somebody we enjoy working with as well. So that's that fire definitely helps. It applies to so much things, so many different things: professional investing, your family relationships. But man, we want to have a little bit of passion for what we do and work with others that are passionate about those same things we are. And so I definitely want an insurance agent, somebody to help me that's excited about what we're doing. That's for sure. So
yes.
So why, on that note, why real estate? Why are you excited about this, my friend? What is it?
Well, I love real estate because it's tangible, right? I really enjoy meeting with my, Edward Jones financial advisor. But boy, I leave the meeting so confused, and it doesn't get any easier. But, when I go to an apartment building, that I own, and, I could see it, and I can run the numbers, and I know the market, and I know what cap rates, we're getting, and, I know an acceptable, cash flow and what's worth it. And, depreciation, it's just exciting. It's really exciting. And, working with tenants and filling units, finding the right tenant, interviewing, I think it's really super fun. You're establishing relationships with local landscapers, local roofers, carpenters, insurance people, accountants. So there's a lot to it. It's the hands-on piece that I really like. And I just really enjoy multifamily. I think it's so secure, and everybody needs a place to sleep.
Yeah, I love it. All of the things that you mentioned: cash flow, tax benefits, appreciation, security of investment. It's not going anywhere, and the stock market can be a little funny. Hopefully, we're recording this in November the 12th, 2020. So we just kind of had chosen a new president of the United States of America. Hopefully the markets kind of, somewhat come down. Pfizer has announced a 90%, what's it called? A 90% effective rate on their COVID vaccine, which is legit. And hopefully those things do something amazing to the markets, which I'm excited for if things start to turn around. But the up and downs are a little bit crazy, and especially if you can say, hey, there's an apartment building, I know how much it rents for, and it is rented today, and we can improve the property and make, turn a $10 million property into 14 million with net operating income. Let's get after it. So I'm definitely a fan of diversification. And one of my biggest ones is in through multifamily apartment complexes. So I agree, Brian.
Oh, it's wonderful. And, your 401k cannot be insured for risk of loss, but your investment properries can. And as long as you're filling it with the right people and you've purchased it right, in the right market, it's a home run.
Yeah, right on. Well, hey, Brian, it's been great talking to you. If anybody wants to reach out, because you provide services across all 50 states, if somebody needs, insurance or, trying to figure out, dial in their number while they're making an offer, then acquiring or renewing, where does somebody reach out to you to get some assistance?
Yeah, call my cell phone or text me, 207-841-7371. I am on LinkedIn and, an avid participant in, Abel's, meetup groups and Devin's meetup groups through Apartment Educators. My email is bmitchell, BMITCHELL @crossagency.com. Definitely happy to have a conversation with you. If you have anything on the line, love to take a look at it. Although this insurance market, it might seem impossible to get really good pricing. There are some carriers that are really hungry for multifamily, and we just have established relationships with them, and I'd be happy to work with you to get your applications out to them.
All right, and that's awesome. And is there anything else I didn't talk about or didn't ask about today that we wanted to highlight or bring some exposure to? Anything I missed?
I think we hit it all. And, we talked a little bit about insurance, a little bit about investments. So I'm looking forward to growing my investment portfolio and continuing to network with people like you, Abel, and appreciative of your podcasts and, all the networking groups that you put on. I encourage anybody listening to join in.
Oh, man, thank you very much. I appreciate it. And if I can help you out in the future, just let me know. Happy to assist. Well, thank you very much, Brian. It's been a pleasure. My name is Abel Pacheco. I'm your host of the 5 Talents podcast. And if you heard something that was valuable today, please review our page, leave us a rating, and subscribe to our show. That'd be awesome. So thank you very much. And we'll see you at the next show. Bye, Brian.
Thanks, Abel.
Thank you for listening to this episode of the 5 Talents podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who follow their dreams and achieve massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents podcast.